in respect of trade between our people, free movement of our people between our countries, and how we can improve the transit trade for Burkina importers who bring their goods through Ghana to Burkina, how we can improve the transit corridor so that they're able to do that without any disturbance. We also discuss issues about the trade between us in agricultural products. We export some products to Burkina Faso, and Burkina also exports some products to Ghana. So
Ghana has long been intertwined with the allure of gold. Known as the Gold Coast during the colonial era, Ghana's history is deeply rooted in the extraction and trade of this precious metal. For centuries, gold has been a cornerstone of Ghana's economy, shaping its trade relations and international standing. Even after gaining independence in 1957, Ghana's fortunes remain tied to the fluctuating prices of gold on the global market. On April 16, 2025, Ghana's government made a bold decision to ban foreign traders from directly participating in its gold market. This landmark policy was a significant departure from the previous decades of open market operations, where international traders had a substantial influence on the gold trade. The decision was driven by a growing sentiment among the Ghanaian populace and policymakers that the nation's gold wealth was not benefiting the country as much as it should. The government believed that by restricting foreign involvement, they could better harness the economic potential of their gold resources. This move, which came into effect on May 1, 2025, aimed to wrestle control of the nation's gold wealth from the hands of international players. The policy was met with mixed reactions. While some praised the government for taking a bold step towards economic independence, others were skeptical about the potential repercussions on foreign investment and the overall economy. The government, however, remained steadfast in its decision, emphasizing the long-term benefits of retaining more gold revenue within the country. They argued that this policy would lead to greater job creation, improved infrastructure, and enhanced social services for the Ghanaian people. The government's ambitious objective was to increase the national revenue generated from gold, ensuring that the profits from this precious resource were primarily directed towards the development of Ghana and its people. By keeping more of the gold wealth within the country, the government planned to invest heavily in critical sectors such as education, healthcare, and infrastructure. This, they believed, would not only improve the quality of life for Ghanaians, but also stimulate economic growth and reduce poverty. The policy was also seen as a way to empower local businesses and entrepreneurs, giving them a greater stake in the country's most valuable natural resource. To oversee this new era in Ghana's gold trade, a government-controlled body was established, tasked with regulating the purchase and sale of gold within the country's borders. This regulatory body was given broad powers to ensure compliance with the new policy, including the ability to set prices, monitor transactions, and enforce penalties for violations. The establishment of this body was a critical component of the government's strategy to maintain control over the gold market and ensure that the benefits of the policy were realized. The success of this bold policy shift would depend on the effectiveness of this regulatory body and the government's ability to manage the transition smoothly. The impact of Ghana's policy shift was nothing short of remarkable. Within just 3 months of implementing the ban on foreign traders, the nation's coffers swelled with an impressive $3 billion in revenue from gold. This rapid influx of capital demonstrated the effectiveness of the government's strategy, proving that taking a more assertive stance in the gold market could yield significant financial benefits for Ghana. This newfound wealth presented an unprecedented opportunity to invest in crucial sectors such as infrastructure, education, and healthcare, potentially ushering in a new era of prosperity for the nation. While Ghana celebrated its newfound gold wealth, questions arose about the potential influence of Ibrahim Traoré, the transitional president of Burkina Faso, in this policy shift. However, concrete evidence linking Traoré directly to Ghana's gold policy remains elusive. No official statements or reports have surfaced to confirm any direct involvement by Traoré in Ghana's decision-making process. It is crucial to rely on verified information and refrain from propagating unsubstantiated claims. Further investigation is needed to ascertain the veracity of any alleged connection between Traoré and Ghana's gold policy. Section 5. Navigating the global trade landscape. Ghana's bold move to reshape its gold market unfolded against a backdrop of complex international trade dynamics. The country, rich in natural resources, has long been a significant player in the global gold market. However, recent shifts in international trade policies and economic strategies have prompted Ghana to rethink its approach. This decision is not just about gold, it's about positioning itself strategically in a rapidly changing global economy. The global trade environment was already grappling with the ripple effects of US tariffs, which had significantly altered trade flows and created a climate of uncertainty. These tariffs, aimed at protecting domestic industries, had far-reaching consequences, affecting not just the US and its direct trading partners, but also the global supply chain. Countries around the world were forced to adapt, seeking new trade partners and renegotiating existing agreements. This period of flux created both challenges and opportunities for nations like Ghana, which saw an opening to assert greater control over its gold resources. South Africa, another major player in the gold market, found itself seeking new markets for its exports, particularly in China, as traditional trade routes were disrupted. The shifting dynamics meant that South Africa had to be agile, exploring new partnerships and trade agreements to maintain its economic stability. China, with its vast demand for raw materials, emerged as a crucial partner. This relationship, however, was not without its complexities, as both nations navigated the intricacies of international trade laws and economic policies. Ghana's decision to prioritize its national interests reflected a growing trend among nations to reassess their positions within the global trade order. This move was part of a broader strategy to enhance economic sovereignty and reduce dependency on volatile international markets. By focusing on its gold industry, Ghana aimed to create a more resilient economy, capable of withstanding global economic shocks. The government's efforts included not only regulatory changes, but also investments in infrastructure and technology to boost gold production and trade. This strategic shift was closely watched by other resource-rich nations, considering similar paths to strengthen their own economic positions in an unpredictable global landscape. Section 6. Goldfields and the future of foreign investment. Ghana's decision to reject a mining license renewal application from Goldfields, a multinational mining giant, sent shockwaves through the international investment community. This move signaled that Ghana was no longer willing to grant foreign companies unfettered access to its mineral wealth. The rejection of Goldfields' application raised questions about the future of foreign investment in Ghana's mining sector. Would this decision deter future investors or pave the way for a more equitable distribution of profits from Ghana's natural resources? Section 7. A new era for Ghana's gold. The ban on foreign traders marked the dawn of a new era for Ghana's gold. With the government firmly in control of the trade, the nation was poised to leverage its gold wealth more effectively for national development. The revenue generated from gold could be strategically channeled into infrastructure projects, educational initiatives, and healthcare improvements, uplifting the lives of ordinary Ghanaians. This shift towards greater national control over gold had the potential to transform Ghana's economy and elevate its standing on the global stage. Section 8. Economic implications and future outlook. The long-term economic implications of Ghana's gold policy remain a subject of much debate. While the initial surge in revenue was undoubtedly a positive sign, sustaining this growth would require careful planning and strategic investment. Ghana would need to ensure transparency and accountability in its gold trading practices to maintain investor confidence and attract the expertise needed to further develop its mining sector. The success of this policy hinged on Ghana's ability to navigate the complexities of the global market while safeguarding its national interests. Section 9. Conclusion: a golden opportunity. Ghana's decision to ban foreign traders from its gold market was a bold gamble, a move that sent ripples through the international gold trading community. This decision was not made lightly. It was a calculated risk aimed at reclaiming control over the nation's most valuable resource. The immediate outcome of this policy was nothing short of remarkable. In just 3 months, Ghana saw a surge in revenue, with $3 billion flowing into its coffers. This influx of wealth was a testament to the country's rich gold reserves and its ability to harness them effectively. The financial graphs showed a steep upward trend, reflecting the success of this bold move. On the ground, the impact was equally significant. Ghanaian miners, who have long toiled in the gold mines, saw a renewed sense of purpose and pride in their work. The aerial views of the mining operations revealed a bustling industry, with miners extracting gold with a newfound vigor. This was more than just a financial victory. It was a boost to the morale of the people involved in the gold mining sector. On the international stage, Ghana's decision was met with a mix of admiration and skepticism. The global gold market, always sensitive to changes, watched closely as Ghanaian officials discussed and implemented new policies. The international gold trading floors buzzed with speculation about the long-term implications of Ghana's move. Would other gold-rich nations follow suit? Could this be the beginning of a new trend in the global gold market? While the long-term success of this policy remains to be seen, the short-term gains have positioned Ghana as a key player in the global gold market. The National Bank, now flush with new revenue, has more resources to invest in the country's development. The sight of gold bars adorned with the Ghanaian flag has become a symbol of national pride and economic potential. This bold move has ushered in a new era for Ghana's golden legacy. As the sun rises over the gold mines, it heralds a new dawn of prosperity and self-reliance. The celebratory crowds in Ghana reflect the nation's optimism and hope for the future. Historical artifacts remind us of Ghana's long-standing relationship with gold, a legacy that is now being revitalized. The world watches as Ghana charts its own course.